The Canadian dollar is falling in the middle of the holiday-shortened trading week after the central bank left its key interest rate unchanged while also maintaining the pace of its monthly bond purchases. But the loonie, which has turned negative on the year against its primary currency rival, might find support from rallying crude oil and natural gas prices. On Wednesday, the Bank of Canada, BOC, announced that it would leave its benchmark overnight policy interest rate the same at 0.25%. The central bank reassured investors that it would not pull the trigger on the rate hike until the economy has fully recovered from the coronavirus pandemic. Policymakers, led by Governor Tiff Macklem, also agreed to keep buying $2 billion in Canadian government bonds every week as the damage from the once-in-a-century global health crisis is repaired. However, officials noted that the pace of asset purchases will decrease as the recovery goes on. The BOC said in a statement, "Decisions regarding future adjustments to the pace of net bond purchases will be guided by Governing Council's ongoing assessment of the strength and durability of the recovery. We will continue to provide the appropriate degree of monetary policy stimulus to support the recovery and achieve the inflation objective." The decision was widely anticipated by market analysts. But economists think that the BOC will begin tapering its ultra-aggressive monetary stimulus and relief efforts, which it has done 3 times already. Meanwhile, the institution was sure to be cautious surrounding the Canadian election campaign. Observers noted that the central bank did not want to employ major changes ahead of this month's federal election, which would inevitably be misconstrued by the major political parties. In other economic data, the Richard Ivey School of Business Purchasing Managers Index, PMI, strengthened to 66 in August, up from 56.4 in July. This was driven by greater employment and STABLE inventories, but it was offset by high inflation. Energy commodities are ostensibly capping the loonies' losses midweek. October West Texas Intermediate, WTI, crude oil futures advanced $1.03, or 1.51%, to $69.38 per barrel on the New York Mercantile Exchange. October natural gas futures soared $0.404, or 8.84%, to $4.972 per million British thermal units, BTU. Since Canada maintains a current account deficit, economic growth depends on exports. Oil and gas remain the country's top shipments, so any change in prices can impact the loonie and the broader economy. The bond market was mostly in the red, with the benchmark 10-year yield down 0.034% to 1.198%. The 1-year bill was flat at 0.27%, while the 30-year bond shed 0.028% to 1.761%. The USD-CAD currency pair surged 0.77% to 1.2746, from an opening of 1.2647, at 14:45 Greenwich Mean Time on Wednesday. The EUR-CAD climbed 0.41% to 1.5037, from an opening of 1.4975,